Good evening, everyone. This is the market overview for Tuesday, April 17th. We're going to start off with the Dow 15-minute chart. Big move over the last couple of days. We had that big sell-off last week, and then we continued to just rebound on the back of large caps, which are down $30 one day and up $30 the next day, i.e. Apple. But looking at the 15-minute chart, we had been waiting for a golden cross on the Dow 15-minute chart. I mentioned it in the Sunday video that we could get it late Monday and probably Tuesday. We saw that cross this morning, as you can see down here, around the 12,925 area. And, over the last several years, as I've said many times, this is probably one of the best little market timing indicators there are. Average gain is 150 points, and from that cross, we are up 175, which yet again proved to be a great cross. We are in a pretty extended bearish rising wedge here, and what led us higher today, a lot of big pops in the Dow stocks. You had some of the Dow stocks up $1, $2, $3. And that adds up to a lot of points. After the initial spike, we treaded water for most of the day. Some earnings reports after hours, kind of mixed. The biggie, of course, was IBM and Intel were the two biggies. Intel beat, and the stock is down after hours. IBM missed, but raised their guidance, and that is down in after hours. So we could see some easing in the indices going into tomorrow's session. If we look at the daily chart, you can see we broke up above our moving averages that we were watching. We broke through that 13K level very nicely. And if we just step back and look at the Dow daily chart, we've got RSI breaking 50. We've got stochastics bouncing nicely off the 20 level and cruising towards the 50 level. We've got our ADX positive cross. We're looking at a positive MACD cross coming here. Stepping back, looking at the daily chart, this looks bullish. So why the hell does it not feel bullish? I mean, this rally over the last couple of days, as I remarked in the chat room today, when we were tanking last week and we had that 200-point down day, there were more trades, more scalps, better trades, better scalps than the crap we saw today. Just a really frustrating market, to say the least, and I feel your pain. Believe me, if you're frustrated with this market, I totally understand. Just does not feel like a real rally. I mean, we do not see a lot of bottom bouncer plays. It's relegated to the large caps, and even looking at the Russell 2K. Russell, big bounce today, right up to that resistance level. Russell was up 18 points today. What was that? About 3% rally today. But again, the small caps that are running are the big cap small caps, not the small little micro caps. They are still dead, and we're not seeing stocks bounce back really in a big way. What we are seeing, HAUP is an example. Yesterday, we actually jumped into this one in the chat room. 115 area, ran all the way up to $1.85. This is what traders are buying right now. Unless a stock is up 10, 20, 50% on the day and has volume coming into it, traders are not going near it. They don't care to buy HAUP at 96 cents because it has dropped 40% over the course of a week. They would rather buy it up here at $1.25, $1.30, up 25% on the day. Today's example of that was CLNT. Didn't want it yesterday at 343. 450 today. They were falling over themselves chasing this and buying it. Another one they were chasing up big today, Heat. Same sort of thing. Ended up red on the day, but this is the kind of stocks that traders are chasing right now, and this can be an extremely frustrating market for traders that trade the way we trade. Buy bottoms, try momentum plays. Momentum plays work, but only if the stock is already run. So how do you trade a market like this? You got two choices. You chase the stocks like Heat or Clint or HAUP. but you got to keep a really tight leash on them, and you have to have a really strong stomach. I like to call these ulcer stocks because you buy them, they could drop 5-10% on you and then run to a new high. You got your stomach all tied up in a knot as you hold some of these plays, going, please run, please run. It's almost a game of musical chairs. Is essentially what the movers are in this market right now. Will it last? Of course not. The market will go back to normal again. It just does not feel like a regular market. So don't be trying to push your trades. I know, chatting with a couple of you guys in the chat room, you've got this inclination that if you take a loss in a stock and then it looks like it's going to bounce back, and you bought 2,000 shares and you sold them for a loss previously, then when it looks like the stock is going to bounce back, you're buying 5,000 shares. You're buying 10,000 shares. A revenge trade so that you can make back all of the losses you had before and then make a fat gain on top of it. Wrong way to be thinking in this market. That kind of thinking in a market like this will just breed even bigger losses, drive you even more insane, more frustrated, and just really mess with your mentality. You got to stick to your trading plan. If you buy 1,000 shares of a stock and 1,000 shares is the position you buy, that is all you buy. You don't revenge trade and try to buy 3,000 shares to get out on a quick spot or quick pop. You trade the plan you always trade, and don't try to be doubling or tripling up to try and get your losses back. You take what the market gives. If it's not giving anything, you back off. I mean, we didn't call a whole lot of trades today, and some of the bouncer plays we tried today that looked set up nicely, rug just got pulled out of. Or looking at HAUP as an example from yesterday, up on 2 million shares volume yesterday. Big move. What did it do today? 194,000 shares and dipped. Where did all that volume go? And it's essentially what's happening. You've got stocks popping, traders taking their quick scalps, and then they just fall back down again. Not a very healthy environment, which means, you either sit on the sidelines, wait for better trading opportunities, or you play these fast pops, but you keep a really tight rope and be satisfied with small gains. Couple of stocks. ALSK is one we tried in the chat room today. We got a nice 9-cent pop out of it. Woohoo! Popped 9 cents. Gave it up on the close, but the play here is, look at this. Over the last 2 weeks, 339 to 244 bottom possibly today. Straight down, no news, just all the way straight down from its very nice uptrend it had going over the last 2 months. Sort of akin to what we saw in HOP. This is a stock, as you can see, loves its 20-day exponential, loves to bounce back to it. 20-day is at 282. These guys get the iPhone for Alaska this Friday. Got momentum, nice bottomed out chart, 248 stops. If you've got a little bit of stomach and a little bit of rope, you could possibly do today's low, which was 244 as your stops. Deeply oversold as it was before its last decent-sized run. Stochastics in the basement. Decent, swingy kind of stock. But again, I hate to go back and beat a horse, but even swing plays are not looking that great. Look at all the swing plays that look nicely set up that we've gotten stopped out of or sold for losses over the last week. NEI, WAVX, HILL, DYAX, etc., etc. It's just an in and out market right now, and if that's what the market is, that's how we have to trade until it changes back to what we're more akin to trading. Amazon, one to keep an eye on. This was a monster symmetrical triangle breakout winner a few weeks ago, has come all the way back down, looks to be consolidating here. 192 area would be the break for a move back up to the 200-day moving average at 200. So that's one to keep an eye on, especially for you options guys. Pop scan tonight. The reason I'm bringing up SNV, the pop scan has really not been confirming this rally. I mean, I'm not seeing the size of plays and quality plays that I would normally expect to see after the kind of bounce we've had in the market. And when I was going through the popper scan tonight, This is the chart setup that I probably saw on 75% of the stocks sitting on the pop scan. This this kind of action here. You know, these hanging man, whatever you want to call it, long candle, indifferent, don't know what they're going to do kind of setups. This stock could explode to 3. It could fall to $1.60. These kind of candles is what I'm seeing a lot of on a lot of stocks, which is why we're seeing the kind of frustration that are out there. I mean, I was surprised at the number of stocks I saw this kind of setup on today, and it makes me just want to sit back and not really force things and not beat myself over the head because there's not a whole lot of trades out there. I mean, you've got the crackheads who are going to chase HAUP up 50% or chase CLNT up 25%. Here's another one they were chasing today, ECYT. This was 373 2 days ago. Huge gap yesterday. They were chasing it again today. This is not my cup of tea. These are not the kind of stocks I like to trade. There are traders that do extremely well trading this kind of stuff, but not my cup of tea, and that is what the theme of this market is right now. It could possibly change tomorrow. Looking at the after hours action, we might get a red day tomorrow, and red days have actually been very good. We've seen some very nice trades on red days. Last but not least, let's take a quick look at APP. Got a big volume spike late in the day today and broke through a previous resistance at 105. This one could have some legs tomorrow, so I would definitely keep a really close eye on this one. Last time this one did a breakout of a range, it ended up popping 20%, so definitely one to keep an eye on. And the other closed stocks have been doing very, very well. There's a couple of them actually on the pop scan tonight, so the sector could be getting ready, and we're also looking at a golden cross on the daily chart here as well. That could add fuel to the move on this stock. So that's it for the video tonight. I know I rambled a little, but I know some of you guys are feeling a little frustrated, a little annoyed at this market, and I guess if I was to give you guys something to take away from tonight's video is don't beat yourselves up over this market. If there's no trades, you just sit back. I mean, all it takes is one good trade a day, even one good trade a week to make your week. Don't be trying to force stuff. Don't be trying to think that you have to trade something, that you're reading about all these other guys making these millions of dollars trading stocks daily. 90% of the time, it's bullshit. Just trade the way you're going to trade. Don't be feeling like you need to force things. Just when you think things are as bad as they're going to get, it'll reverse. You'll have a good day. You'll have a green trade, and all will be well. So try not to beat yourself up, guys. Even though this market has bounced nicely over the last few days, it's not an easy market to trade unless you're trading stocks like, Apple. I mean, yesterday Apple was down 30. And today it's up $30 from the low. I mean, yesterday you had Google down 20 plus. You had Priceline down 30. That's the kind of crazy moves that are going on in this market. And so be it. Not your typical kind of action you expect after a rally. That may change if the Dow, where's the daily chart, breaks back above this level, or we see the Russell get above that 850 level. Then we'll start to see our kind of stocks waking up. So be a little bit patient, guys. Take what the market gives. Don't be forcing trades. Keep your stops tight. And that's it. If you've got any questions, feel free to send me an email, feedback, buysellshort.net. Otherwise, see you guys in Chatham tomorrow. Good night.